Another episode of your daily dose of corporates and market before you hit the weekend. You're watching Corporate Central. I'm Shrestha Tiwari. Over to the day's big corporate stories. First up, Reliance Industries is in talks with lenders for a foreign currency loan of up to $2 billion to fuel the ongoing expansion of its oil to telecoms business, according to a report by Bloomberg. The Mukesh Ambani-led conglomerate plans to use the country's dedicated external commercial borrowing route to secure the loan, the report has added, and the lenders involved in the discussions include Bank of America, Citigroup and Standard Chartered. The facility may have a maturity period ranging between 3 to 5 years, and as per reports, the proceeds will be used for capital expenditure and to refinance another loan that matures in September. Reliance had said in August last year that it plans to invest 75,000 crore rupees over 5 years to expand its oil to chemical business. Samvardhana Madison International, formerly known as Madison Sumi Systems, on Thursday announced that it will acquire a 100% stake in French-based Sma Enterprise from Vinci Energies. The transaction is at an enterprise value of 7.2 million euros. Madison will acquire Sma through its step-down subsidiary Samvardhana Madison Automotive Systems Group BV. In its regulatory filing, Madison has said that the transaction will be presented to the employees' representative body of Sma Enterprise and once agreed by Vinci Energies France will be subject to customary closing conditions. The transaction is expected to be closed within a period of 6 months from the date of signing, and hence Madison expects the completion between October to December 2023. Loss-making Vodafone Idea has removed 5 to 7% or about 25,000 of its retail partners across the country to reduce costs of sales and distribution. Reportedly, the cut-off retailers were giving negative returns to the operator for a long time now in terms of customer acquisition costs. According to industry estimates, VI has a pan-India network of 4 to 5 lakh retail touchpoints like its peers Bharti Airtel and Reliance Jio. Majority of the retailers are multi-brand operators, which means that they offer services for all the telecom firms. A few thousands are exclusive retailers of VI, including some company-operated retail stores. The national company Law Tribunal has directed the resolution professional of GoFirst airline to ensure the maintenance of 9 engines leased from SMBC, Afro Engine Lease BV and Engine Lease Finance, allowing the engine lessors request seeking a direction to protect their assets. The tribunal also cleared the appointment of Shailendra Ajmera of EY as the resolution professional, replacing interim RP Abhilash Lal. The engine lessors have requested the return of their assets following the cancellation of their leases before the initiation of the corporate insolvency resolution. This decision comes even as GoFirst extended its flight cancellation until June 19, citing operational reasons. The Supreme Court on Thursday said that Coal India, a public sector undertaking, would come within the ambit of Competition Act, rejecting Coal India's contention that the law concerned did not apply to it because it operated under the Coal Mines Act. CCI opposed this plea and contended that there is no constitutional challenge to any provision of the Competition Act. The Supreme Court on June 15 held that Coal India Limited cannot seek an exemption from Competition Act 2002 because it is a public sector undertaking under Coal Mines Act. As a consequence of this order, public sector undertakings such as Coal India Limited will now come under the purview of Competition Act and the Competition Commission of India. The case will now be heard on aspects such as the correctness of penalty levied by CCI on CIL and other aspects. And from corporates, moving on to those stocks that were buzzing today and also analyze the reason behind it. First up, IQ Lightings. The shares of IQ Lightings listed on the market with a bang, and the share listed at 392.5 rupees, a 38% premium over the issue price of 285 rupees on the NSE. On the BSE, it listed at 391 rupees. The company raised 607 crore rupees from this IPO, fresh issue of 350 crore rupees and OFS of 90 lakh shares. The issue was subscribed 67.7 times. The company intends to pay off its debt with some part of the IPO amount and will invest some part in a subsidiary named IQ Solutions, which will be used to set up a new plant in Noida. On Friday, June 16, Mazagon Dock's stock jumped up to 10%, touching an intraday high of 1,158.95 rupees, which is an all-time high of the stock. Although the stock has recorded a return of about 5 times in the last 1 year, but the reason behind the jump on Friday is a positive report from a broker. HDFC Securities has initiated coverage on Mazagon Dock with a buy rating and a target of 1,131 to 1,231 rupees. According to HDFC Securities, the company is expected to get large orders from the Ministry of Defence, which will improve revenue visibility. Keeping this in view, a target of 1,131 in the base case and 1,231 in the bull case has been given for the next 2 to 3 quarters. But investors have been advised to buy in the range of 1,009 to 1,050, that is to buy on a decline basis. And the stock of Kalyan Jewelers registered a gain of about 13%. The stock touched an intraday high of 128.60 rupees during the trade, which is very close to its 52-week high of 134.20 rupees. In the last 1 year, this stock has earned more than 2 times. But the reason behind Friday's rally are the many block deals in the stock. There were 6 block deals in the share involving 6.41 crore shares, which is equal to 6.2% of the total equity. On Thursday, the company informed the stock exchanges about the appointments made to key positions. In these appointments, T.S. Anantharaman has been re-elected as a non-executive independent director for 3 years from 15 December. It is worth noting that recently the company's management had met with many big foreign investors, and now big deals have taken place in the company. The stock of Cochin Shipyard, the country's largest shipbuilder, saw a gain of 7.7% on Friday. The stock had touched a high of 594.40 rupees during the day. In the last 6 months, the stock has fallen by about 5%, but in 1 year, the stock has seen an increase of about 90%. The reason behind Friday's boom is the big order received by the subsidiary company from Norway. Subsidiary company UDP Cochin Shipyard Limited has received an order of 580 crore rupees. Under this order, the company has to supply 8 cargo vessels, of which the first delivery will be by December 2024 and the remaining part of the order will be completed by March 2026. Significantly, in the last 1 week, the company has got a second order. On June 9, the company had received an order of 300 crore rupees from the Indian Navy. The stock of Hinduja Group's commercial vehicles maker Ashok Leyland saw a jump of up to 7% on Friday. The stock hit a record high of 169.45 paise and touched an intraday high of 167.80 paise on Friday. That is, the stock is trading outside the record high. In fact, many brokers have increased their target for the stock. The company had a meeting with the investors on June 15th, after which Morgan Stanley, JP Morgan, Motilal Oswal, JM Financial and Nuvama have maintained a bullish outlook on the stock. Morgan Stanley, JP Morgan gave overweight ratings and target of 178 and 175 respectively, while Motilal Oswal, JM Financial and Nuvama have also given buy rating on the company and set a target of 180 rupees. The meeting with the investors, the management has said that there is a plan to launch 6 platforms under Switch Mobility in the next 2 years, and not only this, the management has set a target of increasing the market share by 3% to 35% in the M and HCV sector. That's all on corporates and markets tonight, but before we go over to some important corporate events and triggers which can potentially make big market impacts. First up, on June 19th, AGM of State Bank of India to take place, and the HAL share will be ex-dividend. SAT will hear Z Entertainment's application, and the board of Canfin Homes will meet to discuss fundraising. Also, lock-in will end in 50% of Global Surfaces shares. In Sula Vineyards, the pre-IPO lock-in ends on June 19th. Meanwhile, Mahindra CIE will get a new name as CIE Automotive, and Titagarh Wagons will be renamed as Titagarh Rail Systems. Globally, on June 19th, US markets will remain closed. That's a showdown on this week's Corporate Central episodes. But to catch all the other detailed updates from the corporate and personal finance world, log in to Money9's website www.money9.com. That's all from us tonight. See you on Monday. Until then, stay tuned to Money9.